Okay, welcome to the review of the basics of financial analysis. This is the introduction video. I will be recording some videos regarding to the topics of the course. Then you will be able to use this resource, and also do not forget to read the notes that you need to read. Okay, then the videos and the notes will share some content, but also maybe you might find some things in the readings that might not be in the videos, and vice versa. Okay, then let's start with introduction of financial analysis. This is a quick review of financial analysis. We started the class with the topic of business strategy. Then we reviewed the main distinctions of a business strategy, such as which are the main characteristics of a business objective, that every business object has to be smart, and so on. Then we did a lot of exercises, and then we practiced with strategy formulation, okay, according to specific business situations, etc., etc. And as we mentioned in class, it is extremely important, if we want to be good making decisions in any company, in a business, or in your own company, then you need to understand, and you need to be able to formulate a strategic plan for your company. Okay, then in my first reading, I talk about topics such as the strategic management process, okay, and where you have to define, or a company has to define the mission, then the vision, then set the objectives, okay, and then analyze the situation with maybe the further analysis, okay, and then you gotta implement the strategy and then evaluate the results after implementing the strategy. But an important part is setting objectives, okay, business objectives. Then we emphasize a lot in exercises and in the reading which are the main characteristics of an objective. That every business objective has to be specific, measurable, attainable, relevant, and timely. Okay, then usually you should have at least when you think in business objectives, you gotta think in financial measures, in financial performance measure of your company. Okay, then in this case, that is the reason we're gonna review in detail the main financial analysis topics, okay, and which are the main financial analysis that basically we can divide it in two: financial ratio analysis and cash flow analysis. But we will focus only on financial ratio analysis. Okay, then later on we're gonna use this one to better formulate business objectives. Okay, and that is just basically an introduction. Then it's a context. Then basically I'm going to start with the definition of financial analysis. What is financial analysis? Basically, financial analysis focuses on I would say selection, manipulation, okay, evaluation, and interpretation, okay, of financial and market data of a company, of a firm, right? Okay. Then in the class we will work in all the details about selection, manipulation, evaluation, and interpretation of financial and market data. But how this market and financial data is structured in a company. Basically this information is structured or is formatted in what is called financial statements. Okay, financial statements. Okay, statements. Okay, financial statements that basically you should remember which are the main financial statements and what are they for. But basically we can say that the main financial statements are three. The first one is balance sheet. Okay, here is where you state in detail which are the resources of the company, okay, in a specific period or in a specific point in time. Then you show the total assets and in detail how the total assets are composed. Then you show the total liabilities, how the liabilities are composed in every account, and then you show how the shareholder equity is composed. Okay, then we will talk about in more detail in another video about this one. Then the other financial statement is the income statement. Okay, income statement. In this in the income statement, you specify for a specific period of time. You specify the amount of revenue the company had in that specific period. Then how much was the variable and the fixed cost of incurred in the generation of the service or product that were sold, and then you end up with the net income, right, after calculating taxes, interest expenses, and so on. And the other important financial statement is the cash flow statement. Okay, cash flow statement. Okay, statement. Okay, these are the basic financial statements. But now, what are the main type of information that these statements communicate to managers, executives, owners, and so on, and stakeholders in general? Basically, these statements basically communicate. They communicate, or is the same saying convey. Okay, basically two aspects. Okay, the first one is the operational performance of a company. Okay, and the other important aspect of any company is the financial situation. Okay, now what is operational performance? Basically, operational performance is related to, this one is related to how efficient the company is using its assets or its resources to produce the return on its investment, basically. And financial situation has to do with the firm's capability to satisfy debt obligation. Okay, all the debts that the company has, for example, it could be loans, bank loans, okay, or other type of loan, short-term debt, long-term debt. Then is the capability of the company to be paying its debt obligation on time. Okay, then this is related to the resource generation. Okay, how the company is using its assets to produce wealth. And this one is related in how about the capability of the company to be paying its own debt obligations. Okay, its own liabilities. Okay, I'm gonna stop here. Then next video we're gonna continue with the elements of financial statements and so on. Okay.